Now I should be live again. Don't stop believing. Okay, hello. I know that you can still hear me, but I'm just gonna do a quick little mic check 1, 2, just in case. Right, so I know that you can hear me. The previous live stream cut off because my laptop wasn't plugged in for some reason. I mean, it did warn me. It did give me like a pre-warning, but I took no notice, and then my laptop died and the stream ended. So that's my bad. But like I was saying though, so we have first presented fair value gap of the equities open highlighted in blue in the center of the screen there. This. So this price, no sorry, this first presented fair value gap somehow perfectly overlaps with the 6:30 a.m. pre-market session liquidity. So that's definitely notable, and we're gonna send the 6:30 price into the future as well, right? But there is also, so this might actually prove my short to be invalid, but I'm gonna give the reason for that in a second because I think I can see it. So we have the first presented fair value gap of London, and I'm gonna trust that is accurate because when I've been putting these on, I've been making sure that I follow the rules. So literally we have a congregation of this one day where all of the three things that I focus on are converging, like, or the sort of, converging, all in the same threshold of price. So that's very interesting to me. This is primary objective now. So I know I was saying about the opening range gap, but maybe the opening range gap is in fact going to be staying open. So the last stream was only 25 minutes, but I recommend that you do go and watch it because in those 25 minutes, I sort of tried to explain as accurately and coherently as possible what I'm looking at in the market and why I sort of was looking for longs in Bitcoin yesterday off that inversion fair value gap. But so essentially, the opening range gap is completely unmitigated. But there's something that I've only now just noticed. This, I must have dragged this along before from previous price and not actually looked at it close up and like studied the delivery revolving this area on the lower on the 1 minute time frame, right, or like close up, right? So you can see that this first presented fair value gap of London Open Kill Zone in green, this one sends price higher. It catapults price higher. So literally, like liquidity was built in the first presented fair value gap over time. So we have liquidity here because people are selling the FPFVG. And then we have liquidity here because people are selling the FPFVG. And then we have liquidity here because people are selling the first presented fair value gap. And then what does price do? Now this makes perfect sense. What does price do in regards to all of this liquidity here, which just so happens to be inside of this green first presented fair value gap of London Open Kill Zone from ages ago, by the way. It's like one of the initial ones of this range, like one of the original ones of this range. I like tend to focus on the oldest ones because they provide the most clarity. So you can see how like we've generated liquidity in this first presented fair value gap 1, 2, 3 times, and then prices just shot through it like a fucking catapult slingshot. Or a catapult or a slingshot, right? That's crazy. And then it also just so happens that the first presented fair value gap overlaps with the opening range gap high, which is very, very fascinating. It's almost like it was done on purpose. Sorry, I'm talking to the baby. That's right, I have a baby. Standing on me right now. Are you good? But so yeah, like now looking at price, I can understand why we didn't actually mitigate this area again, because because price was actively taking liquidity from above this area. So I feel like a lot of people would have been anticipating this opening range gap being filled, and it wasn't filled. But like now, I can see that first percent fair value gap of London, the green one in the middle of the chart. I can now see a reason as to why price shot through that high. Like regardless of the liquidity aspect. No, sorry, it's more the liquidity coupled with the first percent fair value gap. So like you can't just say, oh, it's gonna shoot through any FVG. Like, but I've just shown you how liquidity has been generated inside of there. And it just so happens as well that it overlaps with the open range gap high. So there's very many coincidences happening at the same time. Also, there are coincidental convergences up here. Because we have the first presented fair value gap of the equities open kill zone, which is there. We have the pre-market session liquidity of the 6:30 a.m., which is there. And then in the same span of range, there's also the London open kill zone's first presented fair value gap. So to be honest, I favour the idea of both things happening. So I actually want to see both things happen. I want to see the market somehow make its way up here and then down here, or conversely, I want to see the market make its way down here then up there. So something similar happened to me yesterday with the Nasdaq. What it was so I'll show you that in a second, right? But like this is pretty much how I feel in terms of what I have access to on the chart here. Like not looking at anything else, I can see that we have convergences. Like I don't know, somehow like all of the three areas that I focus on are overlapping, like with one another right there, which is just fucking fascinating. So that is where I have my eye on here. But I also notice that this open range gap hasn't been mitigated. So I'm kind of in the middle. I'm kind of like sort of, I don't know, you could say like price is currently suspended between both of these levels. But I'm in the middle myself as well. So I kind of want to see price come up into here, maybe sweep the liquidity of this and then target the opening range gap. But conversely, we could actually reject this high completely. We could fail to make a higher high, and then we could potentially come down anywhere into this opening range gap, preferably the consequent encroachment, and then I think that we'll spool higher and take out this area here. Now, I understand that price is like very close to both of these areas in terms of today's availability for price to move. So the range in which price could travel today. Obviously, we could very easily go up there in the next few hours. We could very easily in the next few hours come down here. Price is likely not to consolidate and not touch either of these levels. So one of those levels will be traded to first, 100%. Like there's no doubt that it's not possible for one of those levels not to be traded to first. One of them will be traded to first. But is it going to be the opening range gap or the conversion of those PD arrays that coincidentally all formed on the same one specific day? So it's going to be very interesting to see, but essentially I want to see if price can either trade high into here and then low into here, and then it can kind of like do whatever it wants. Really, I don't really mind. Or that's too much range, to be honest, in such a small amount of time. But realistically, yeah, I want to see if price can come up here and then down into here. And not as far as that, 1 second. I only really want to see consequent encroachment of that, which is there, right? So I think price could come up, sweep the liquidity above this, anywhere above this, it doesn't really matter where, right? Or conversely, price could want to come down first into the opening range gap and then take that area out. So one of those two things is going to happen. But in fairness, price may decide to rebalance the entirety of this opening range gap, and I should be in shorts already, because I'm seeing this macro down here, and I can see that the price has just run up high to, like, I'm very zoomed out, I know, but I can just see it. So price has like formed this macro, and then we've immediately taken the high. Oh no, sorry, never mind. We did have candles in the range. It didn't just immediately take the high.
Oh.
So we had like a sort of pullback retracement into what's almost the 50% range of the 50% level of this entire range. So we kind of did pull back into that, rejected it, and then took out the high. And then the opening range gap formed over time during electronic trading hours. During electronic trading hours, we had a generation of liquidity inside of this first percent fair value gap, which we didn't know at the time, but over here ended up being the high of the opening range gap, right? So which is this big brown box. That's formed by this low down here to this high in time. So like it's the time that matters most. Where is price at that time, right? So currently we can see price looks like it's kind of like giving up the ghost, but we won't know that until this low gets broken. But basically I'm assuming that price is going to stay in this range for a while. Look, it looks like a fish. My drawing looks like a fish. It looks like a really shit drawing of a fish, doesn't it? That's so funny. But really, I want to see if price can come up into these convergences and then trade into the mid of the opening range gap, and then sorry, wait. I was gonna say but it's not really that. So I want to see if price can come up into here, trade into these convergences of the PD arrays, and then target the opening range gap midpoint. Or I want to see if price can come into the opening range gap and then target those PD arrays. So it's kind of like a if this then that scenario. Like could price decide to pick one direction and stick with it? Yes, of course it could. But if we did come back into this opening range gap midpoint, that's all it would need to do. And then it has free reign to take out any liquidity generated here and then target this high. But if we rally up and take this high first, then the liquidity points become this low and that low. In fairness, the way I see it is this and this are the liquidity regardless. Because, but this high is also going to be liquidity as well. So if we trade lower, this and this would have been the liquidity, and we're going to come into here, right? And then target the high. But if we trade higher, then this and this is still potential liquidity to be taken. Because if we've traded higher away from it, this and this are still primary targets, and we'd probably come back into the middle of that range. But so that's enough for gold. Anyway, I'm going to quickly go back over to Bitcoin just really fast so that I can see what's going on with that. So it's looking good, but not for my entry. So we can see that we've come up into the midnight opening range. The most recent midnight opening. Sorry, I said opening range. We've come back up into the most recent midnight opening price. So basically, we left it unmitigated, traded way higher, formed the low of the org, traded into the org, and then we shorted back to the unmitigated opening range. No, not opening range, man, for fuck's sake. Midnight opening price. Why can't I speak? It's midnight opening price. I'm just distracted at the moment. So, midnight opening price is resembled by this black line. And then you can see that we traded away from it, targeted it again, and now we're sort of kind of looking like we're using it as like an area to bounce off. Like this is just algorithmic respect, you know. If I'm trying to just get like one tiny fucking 0.5% trade on a tight ass stop loss, then it would have given me it there, you know. Like, I mean, accounting for spread, of course, is going to be more like that, you know. But it's giving you algorithmic respect. Like, if you wanted to short that, based on what it looks like, it did give you it for a small amount of time. But we're currently, Price is currently choosing between the opening range. For fuck's sake, why do I keep saying that? The midnight opening price of this black line and the inversion fair value gaps here that I was speaking about on the past live stream. So we will also have to see what happens in that regard. My entry is already placed. We'll have to see what happens with gold as well. I favour this playing out. That's more or less what I would like to see. But obviously, conversely, we could do the red path. So, like, I favour the black path, but we could also take the red path as well. So, like, I want to see this happen. But it is also likely that we could break through this high, continue higher, come into this convergence of the PD arrays, and then we could target this liquidity, the first percent fair value gap, the ORG, the opening range gap itself. We could target the first percent fair value gap of today and the consequent encroachment of the ORG. So I do see those lower targets, but I also do see how price could definitely want to go into that convergence of PD arrays up there, because it's not like we just have the equities open and that's it, which is the blue one. It's kind of like the blue one is overlapping perfectly with the two beneath it. So that is why that is of significance to me. So so next I'm going to go over to the NASDAQ, but I don't want this video to be too long. See, this is only 17 minutes and the last one was 25. So I've been talking for roughly about 35 minutes, maybe, I don't know, I can't do math. 15 plus 25 is 40, plus 2 is 43 or something. I've been talking about for about 45 minutes or something like that, right? But so that's essentially what I'm hoping for in price, and I'm gonna come back to this later, and I can like see what's happened. I do like this Bitcoin trade because we've taken that sell side, even if it is only like a very small like snippet, like a very small tiny move, which it's already presented here for us. That I'm happy with, because like, I mean, if I was going for my 1% for the day on a very small account, then the long from this sell side, sorry, I could have entered on the consequent encroachment of that, or used the idea of that as a stop loss, which I have done here. And then a 1-to-1 trade, in which case would be here, but that would have to account for spread. So I would have needed my entry a tiny bit lower than where it's actually on here, unless we break out higher than the TP, and then in which case, then it was a good 1-to-1 trade regardless of the spread, right? But it's very, like, I don't know, I wouldn't say it happened, it's not happening fast, but it's like very close proximity to where price is at currently, so it's going to happen fairly quickly. So I've spoken about Bitcoin, I've spoken about gold. So now I want to talk about the NASDAQ, and I haven't really been looking at the NASDAQ. Is this what I'm being presented with? Yes. So this I don't really know what to say about this one. This is quite challenging, actually, to be honest. Oh, it's fucking frozen. I don't think that's where we're at anyway. Oh, come on, man. Why is it doing that? Right, one sec. Save and close. And I'll open a new. What's that? No, what's that? No. Oh. In fact, you know what? I might end this live stream in a second and then start a new one so that I can talk about the Nasdaq for 20 minutes. But like, I'll keep the live streams essentially together. But I don't want to make the video too long because I'm aware that people just like fucking like I won't sit there and listen to the whole thing. But if I can like maybe perhaps watch the first 25 minutes, the first video, and then like I don't know, a few hours later I'll watch the next 20 minutes, the second video, and then like you can essentially just segmentize what I've been doing through time as opposed to like watching an hour and a half live stream of some random fucking kid talking, which is probably like me talking to myself, to be honest. Like I mean, I assume that I'm the only person that's gonna watch this, but anyway. So as we go over to the Nasdaq here, what are we seeing? What are we seeing? I want to put this pink. It's pretty cool actually. The colors at the top here, like underneath the ticker symbols. It's cool because you can actually sync tabs to the same interval. So like, say I want to look at Euro USD and GBP USD, like different charts but the same time frame. It's gonna like sync them together so that I can view both of them in the same fashion. This looks like a stop loss, but really, I don't know. This is me like attempting to follow along with ICT's analysis. So ICT was saying he favors another. Wait, what did he say? I'm gonna have to re-familiarize myself because I actually have forgotten. But I'm assuming that ICT wants to go long. I think he wants to go long. Yeah, he's expecting the dollar to rise because potential wars between Iraq and the United States. The dollar typically rises in times of war, and in times of war, the Nasdaq. Sorry, no, it's not that the Nasdaq declines in times of war. It's like the Nasdaq declines because the dollar is rising. That's why. So war doesn't affect the Nasdaq directly. War affects the dollar, but the dollar affects the Nasdaq. So anyway, I'm gonna start a new stream, and I'm gonna like give myself 5 minutes before I go back in because it's also mainly because I want to see what price is done without having the stream too long. Does that make sense? So when I come back in like 10 minutes, I'll be able to have a few more candles on the screen, and I'll be able to like sort of judge based on what I see there. This is what the Nasdaq looks like currently, but I know I haven't spoken about the Nasdaq yet. I'm gonna wait for that. So we're just looking at Bitcoin and gold for now. This is my analysis, and what I expect. So the last stream was 25 minutes. This one is 23 and a half. I'm gonna end this stream and I'm gonna come back in like 5 minutes. Okay. Maybe not 5 minutes. It'll be like 10 minutes, but you'll be able to see anyway. So it is what it is. You'll be able to click on the next stream and just watch that whenever you want. So it doesn't really matter how long I take to do it. But I'll be back soon anyways. Just click on the next stream after this one. Okay.